Hello friends. Indian IT sector is falling a lot from the top. So what is the roadmap from here? Whether it will fall or not? Whether there is a more bumps from here or not? So let us discuss in detail. Friends, I welcome you all to my YouTube channel. My name is CA Tapan Doshi. And if you're not subscribed to my channel, please click below link and subscribe to my channel. So guys, let us start. So let us first see what are the key highlights of the Indian IT sector. First of all, Indian IT sector contributes almost 8% of Indians in GDP. Now that is a big contribution. And it is always considered as a jewel of Indian GDP and also Indian economy. Second is Indian IT sector has a weightage of 16.2% on Nifty. Now that is why if the IT sector falls, normally Sensex and Nifty do fall because of the high weightage. And also IT sector has performed very well in last few years, and their weightage has increased from almost 5% to 16% in last few years. So that shows the importance of IT sector in the Indian stock market. Most of the big companies and most of the global outsourcing company are from Indian IT sector. Again, the world leading source destination, that is 55% share of financial 2020 was of Indian IT sector. And most of the countries are dependent on Indian IT sector for the infrastructure requirement, that is IT infrastructure requirement. And the main clients of Indian IT sector is across the globe, that is US, Europe, correct, even in Asia. So that is why it is predominantly important that Indian ICT sector do perform well, so that even this company are able to bring their cost lower at each level. Again, in government focus is there for the digital India vision. Government is trying to see that yes, most of the things which are actually a routine manner can be automated, and that's why they are giving a big digital push. Even from last 2 years, from the COVID pandemic happening, no, there is a big digital push, and because of the COVID pandemic, there is a big demand for the IT sector. Actually, most of the companies are increasing their budget for the for the IT sector, correct? Because they know that digital is the way to go forward. Now, IT sector export can reach to USD 1 lakh crore by 2030. Now, this is a big reach because, and this is where India is getting foreign exchange from the other countries. Because you understand, most of their clients are in Europe, US, and other continents. And from there, whenever they deal with, they have to do their payment through US dollar. So, Indian IT sector indirectly brings USD in our Indian currency, and that is why it is predominantly important that Indian IT sector do perform well. So that's why whenever US dollar is impacted, suppose US dollar goes strong, Indian IT sector gets benefited because of this, because the payment is there in for USD dollar, correct? So these are some of the angle which you have to see while investing in Indian IT sector. Now let's talk about what are the key readings of the quarter four result. Quarter four is nothing but financial year 2021, or sorry, 21-22, January to March readings, correct? So first is that Indian IT sector were under a margin pressure. Now the reason was simple, that they have to retain a lot many clients, and again their clients, not clients, basically employees also, basically low. You can say, understand that because of high IT demand, there was a big attrition in IT sector, and in order to keep their employees in check, they have to increase their salaries and everything. Again, whatever freshers they are bringing, they are also bringing at a high scale. So that is why, because of that, there was a margin pressure, and again USD INR back also there was margin pressure on that point. So most of the companies were facing margin pressure. Again, there was a good demand growth and revenue growth because of pandemic. There was a big push to the digital, on a digital front. Most of the companies were increasing their IT budget. So that was a good demand growth and revenue growth. And most of the clients, which the IT companies were there, they were telling they are increasing their actually expectation, and they are increasing their services also. The reason is simple: they want to automate their services. Correct. And India is the lowest service provider. That's why India is always in demand. Again, larger order book driven by strong deal wins. Most of the companies has won a big deal from foreign countries, and the reason was simple because of the low cost maintenance and everything. And again, Indian IT structure is very well developed. Even the IT professionals are there across the globe of Indian companies, which are helping all the companies to provide a better seamless facility. Now there is a margin support from strong growth and fresh hiring. Now the thing is, see, because there is a margin pressure, however, there is a strong growth and which is helping margins to sustain. Then also there is a drop. Like we have to see whether these margins are able, they are IT companies are able to maintain or not. Because again, whatever current employees are there, they have in order to they are giving very good bonuses and they are giving a salary hike. However, they are trying to compensate through fresh hiring, freshers hiring, and everything. Correct. So that all the companies are trying to manage their margin, but we have to see whether they are able to keep it for a long term or not. Again, big companies are better placed to absorb supply pressure. See, understand, whenever there is a attrition or new freshers come and you have to train them and you have to make them understand all the system and everything. And so bigger companies are better placed because they are able to retain their employees. So that's why they are able to absorb the supply pressure very well compared to small and mid-cap companies. Now let us see what are the key risks going forward. First key risk is that higher FII holding. See, understand the due to this economic crisis that is happening because of this geopolitical crisis between Russia and Ukraine, the inflation is going up across the globe, correct? And again, there is a saying that US may go for a recession. Now that is why I know what is happening. FII selling the stock in developing countries like India, and they are going back to their own country where their US bond yields are much better now. So because of this, there will be always be a pressure on the IT stocks like big companies like TCS, Infosys, like because of their FI holding is big. So whenever they sell, the stock prices may go down. Another is global IT stocks are falling. See, who is the mother of all the IT companies? And that is index is Nasdaq, correct? If the Nasdaq falls, that is in US. Now all the global IT companies falls, and Nasdaq has corrected more than 30% in current year. Now, compared to that, Indian IT stocks have fallen maybe 15 to 20%. So there is a room. But the thing is, Indian IT companies are much placed and their valuation were not so high as was there for this FANG stock, which we are talking about in US, correct? So that is why, but yeah, if the Nasdaq falls, Indian IT companies may fall from here also. Again, Russia, Ukraine, or as I told you, there were few of the clients of the current IT companies in Russia and Ukraine also. Now there also there is a big impact, and because of this big impact, their clientels are they are facing lot of challenges to serve their clients, and also payment and all this has been stopped. So because of the Russia-Ukraine crisis, no geopolitical crisis, the problem is if the countries start coming to recession, they may cut their IT budgets. That is why it is one of the key risks going ahead. Global recession. So the problem because of high inflation, already China, US, and Europe are feeling the jittering of recession. Now, because of this, if the recession comes, and then there will be impact on the individual company's budget, IT budget, and they may negotiate more with Indian IT companies. So that is one of the risk going ahead, that yes, if they go for a recession, they may cut their budget, then the IT companies may suffer a order loss. Now let us see one of the important factors, that is EBITDA margin trend. Now earning before interest and tax, correct? Now TCS is able to maintain the margin. As you can see in December 25, 21 it was 25%, and again in March 22 they are able to maintain that is 25%. However, for all other companies like Infosys, Wipro, HCL, L&T, Infotech, Infosys, Mindtree, correct? They all their margins were down. And actually, Infosys was able to maintain around 15.2 and LTTS also 18.6. Rest all the companies' margin were down, and the reason which I told you earlier. But and the main reason was attrition rate was on a higher side. So in a bigger company, only TCS was able to keep their attrition rate on check, and it was around 70.4%. However, rest all other companies, no, whether it is Infosys, Wipro, HCL, you can see 27.7% for Infosys, 23.8 for Wipro, HCL 21.9. So this is the high attrition rate. And because there was such a demand of IT professional across industry, no, there was always a shortage of good people. That is why attrition rate was on a higher side. So now let us talk about what are my three top stock recommendation in IT sector. So first stock is Infosys. Now talking about Infosys, what are the positive in this quarterly result? First was that in financial year 2023, revenue growth guidance of 13 to 15% ahead of our estimates from 11 to 13%. So actually even in the tough market, Infosys had increased their guidance to 13 to 15% against the estimate. So that was a plus point. Second was number of USD 10 crore clients increased further to 38 from 37 in quarter 3 financial year 22. So that is what no, there actually clients are big corporate clients are increasing and a steady rate. And again, you know that Infosys has actually outperformed TCS and many other companies in a big way. So that's why Infosys, you can see that good response in their stock prices also. Again, the final dividend was around rupees 16 per share. The total dividend around for financial 22 was 31 per share. Now, at least 50,000 freshers will be hired in financial year 2023 for the first to provide talent for growth, because see they are getting lot of contracts, and in order to fulfill their contracts they are hiring lot of freshers. So that is why they are hiring a lot, and almost 50% freshers they are going to hire. Now let us see what are the negatives. Negatives, there is a sharp 200 bps quarter to quarter fall in the margins. As I told you, the margins were hit. Muted growth driven by seasonal weaknesses. The company has cut margin guidance went from 21 to 23, from 22 to 24. As I told, because there is a margin pressure, they have cut their margin guidance also. Again, there was a weak quarter-on-quarter growth of 1.2% in constant currency and 0.7% in USD terms. So quarter-on-quarter growth was on a lower side. The net profit declined 2.2% quarter on quarter. So this quarter the result was not so great. However, because of their initial track record of last 2 to 3 years, we are giving better guidance to them, better valuation to them. So talking about Infosys, current valuation at current price of 1461, the EPS is 53 and PE is 28, correct? So what is the future projection? So even if we take EPS growth for financial 23, that is 11%, and for financial 24 estimate 16%, the price target will be around, that is if we take P 27, like why we are taking lower P? Because of these current tough conditions, we are taking lower P compared to earlier P. So that is against 28, which is current P. We are taking for future 27 P. And if you multiply EPS of financial 24 estimate, that is 68.2. And that already I told you how we have taken. That is for the financial year 23, we have taken 11% growth. And for financial 24, we have taken a 16% growth. And both, all these are forecast. So if we take this forecast, our target price comes to 1841. That is also 26% above from the current valuation. So we are saying buy on Infosys one. Now second stock recommendation is HCL Technologies. So what are the positive for HCL Technologies? First is there is a strong demand drivers will add healthy organic growth in services. So there is a strong demand drivers. Again, demand is resilient for now in both US and Europe despite macro risk. So even though there is a macro risk, but their clients, whatever they have, they are able to maintain them and retain them. So currently they are saying that they don't have a big risk from this US and Europe currently. Business mix has improved as per the management. Better business mix will lead to a better margin. So that is a positive for HCL. Again, potential for growth acceleration in digital foundation. So they are going big way in another segment, that is in digital foundation. They are having a very good growth in that segment also. Now let us see what are the negatives. First is, as I told you, the for the current employees they have to pay very well. That's why there is a high wage cost in HCL Technologies. Again, there is a high travel cost. Again, there are other discretionary cost normalization expenses, no, whatever happening, and transition cost in large deals. Now, what is happening that if one company changes vendor, there is a transition cost, correct? So there is a transition cost in large deals. So these are some of the negative for the HCL Technology. Now, talking about the valuation, the current valuation is that the current market price is 1004 and EPS is 50 and PE is around 20. Correct. Now, for future projection, what we are saying that for the financial year 23 estimates, we take a 9% growth, and for the 24 estimate, we take 16% growth. The price target that is at PE 20 and the estimated there for the 24 estimates is around 63.2. Then also the price targets will come to 1264. That is also almost 26% above from the current valuation. So you can buy at this level also. It looks good for the future. Now, third stock which we recommend is Tech Mahindra. Now, talking about what are the positive of the Tech Mahindra. Tech Mahindra had a very good result. First is there is a reported constant currency growth of 5.4%. So good currency growth. Again, strong vertical telecom growth of 5.4%. Now, telecom segment has done a very good growth in last few months, and that is what it is showing here. Again, they are investing in new age technologies, and the net profit grew by 10% quarter and quarter and 15% year on year. So very few companies like Tech Mahindra has really shown a growth from quarter on quarter to year on year. Even a big companies like Infosys is not able to deliver that. So that is a positive thing. So what are the various negative for the Tech Mahindra? Tech Mahindra is there is a questionable acquisition program. See, they have done a strong acquisition and aggressive acquisition, but the problem is the visibility is less from the analyst point of view. That's why there is always a question about acquisition program. But let's see in future how it happens. Again, a company with a volatile history in profitability. Because you see, the way they are acquiring, and again, the problem is Tech Mahindra is always lot of volatility is there on profitability front. It's not like TCS and Infosys where there is a benchmark and constant. Here there is a lot of volatility. That's why there is always a question whether they are able to deliver or not. Third is EBITDA margin declined by 160 bps quarter and quarter to 13.2%. So there was a fall in EBITDA margin and that was declined to 13.2%. Again, higher wages to retain employees and backfill attrition. Because of high attrition, they have to provide and give a better salary to each and every employee, and that is why the cost was up on that front. Now let us talk about what is the current valuation. The current valuation for the Tech Mahindra is like for the market price currently is 1123. So EPS is 57 and PE is 90. Okay. Now, if we talk about future projection, even if we consider 23 estimates around 13%, 24 estimates is around 20% EPS growth. Now, this projection we have done from our analysis, we are not saying this will happen, but this is a projected figure. So even if you take at 18p and that is EPS of 77.7 for the 24 estimates EPS, the price comes to around 1400 and which shows around 34.6 upside from the current level also. So this was about Tech Mahindra which has shown a very good result. So guys, this was our top recommendations. First is Infosys, second is HCL Technology, and third is Tech Mahindra. All the three stocks looks good at current level. You can buy for a long term. Now, someone will say okay, IT stocks will fall more from here also. Don't buy. But see, understand, you don't know when it will stop. Correct? And and you don't know when it will stop and it will start going up. And so all these things you have to keep into consideration, because at the end of the day, if you are getting any stock at a good valuation, better to buy it. See, IT is in a bull run. Okay. Yes, there is a little bit flip side on this bull run. It may continue for a few months also, but overall you can buy IT stocks. Of course, if the Nasdaq falls more, then the IT stocks may fall more. But at current level, you can start buying maybe in installment, but start buying because all these stocks has a good order book and a good track record. And no, IT demand is not going to slow down. So at least at the contrary, you can start buying it. So guys, hope you like this video. And if you want to know more about all these fundamentals, everything, below is the link where I given my thoughtful investor course where I am showing how to value a stock and how to project how to select a multi-bagger stock and everything. You can go and check it out. And also you can attend my free webinar, which is happening every week. So you can get a lot more insight about this. So guys, do check it and do subscribe to my channel and do like this video, and I will see you next time with the next video. Thank you.